what we're going to walk through today is I'm going to share with you my analysis for the week. Okay, focus on the top process, and then if you have any questions, type on the chat. Okay, because I can't hear you. Then I'll answer your questions based on the chat itself. Okay, so do you guys all downloaded the or have already looked through the weekly analysis report? Okay, this one that I'm looking. This one I'm referring to this report itself. Okay, so let me walk you through for this. Just okay, so let me walk you through this report again, right? In terms of fundamental analysis, in terms of central bank, this one we went through the weekend, so there's not much changes, right? But what I want to walk you through is more of the weekly directional bias. Okay, so for euro, we are slightly bullish. Okay, and the remarks over here is because of fundamentals showing signs of recovery, as well as COT is showing signs that people are actually buying into the euro futures. Okay, but for pound itself, we are bearish on it because last week, if you are aware of it, all the PMIs, including manufacturing, construction, as well as services PMI, is all negative for the UK. Okay, so what we are referring to over here is that the fundamentals continue to show weakness. Alright, and this coming week, if I'm not wrong, on Tuesday, which is tomorrow, what we have is a BOE inflationary report. So that will be an important one to keep an eye on what they're gonna say. Okay, for Japanese yen, right, we are basically pretty neutral because there's no sign as to what is gonna happen for this particular week. And if you look at the news on Japanese for this week, there's also not much. Okay, USD we are continue to be bearish, and Aussie as well. Okay, so the simple reason for USD is that most of their economic data is still very negative. Aussie itself, the main reason is because of RBA cutting its interest rate. Alright, but if you look at New Zealand dollar, we are more or less neutral right now, simply because fundamental is mixed for last week. GDT, which is the daily goods product price index, right? It's worse than previous, but employment came in better. Okay, COT also shows signs of demand, people buying into New Zealand, so that's why we are pretty much neutral on that. For Canadian, we are bearish. Okay, the reason is because of trade balance and its employment change came in worse than expected. Okay, but because just now, last 2 weeks, last 2 days, what we share is that also Canadian, you need to refer to oil prices. Okay, so what we see over at the oil price is that oil prices isn't falling, so we are pretty much Canadian is pretty much still supported by this. Alright, and for this week itself, there's not much news in Canadian, so what will be driving this currency will be mainly on oil prices. Okay, so this is the few key currencies that you need to, key risk events that you need to monitor for each of the particular currency itself. Okay, let me walk you into the COT segment. Okay, so some of you might still be quite blur as to how we actually analyze this portion. Okay, I'll walk you through part by part, right? So the first currency I want you to focus on is on euro. Okay, what we want to look out for is from last week and this week, we want to compare what are the changes. Okay, and what you see for euro futures is that from previous week, alright, it's very negative. It's almost close to negative 40,000. And what happened this week is that it's negative 23,000. So there's an increase in euro futures. Okay, but we want to find out this increase, is it due to people start to buy more euro futures, or people are exiting their positions from it. Right, so that's where we look into the long week to week and short week to week. Okay, so this is a tracking what are some of the changes. So if you see previous week, right, there's a decrease in long position, but this week itself there's an increase of close to 14,000 long positions in euro. Alright, and over at the short positions, you can see that this week we have 2,000 short position exiting from the euro futures. Alright, so this shows you that people are buying into euro futures and they are exiting from their short euro position. Okay, so this gives you a key idea that the demand for euro futures is increasing. Okay, so for open interest, what you see is open interest is increasing. That means there are more people entering into the Euro futures market as well. Okay, so this is a sign that more people are entering the Euro futures and more people are buying into the Euro futures. So this can give some support or even demand in terms of Euro prices. Alright, so Euro prices has a tendency to go up. Okay, maybe I speak too fast. I'll speak slower then. For COT, alright, COT index, what we are looking out here is that last week the COT index is 62.5. This week itself we see an increase. Okay, so 67 is still not too bad because we still have more room for it to go up. Okay, so this COT index, the maximum is 100 and the minimum is 0. So 67 is still hovering around the mid level and you have still more room for it to go up. Okay, so this you use this COT index to tell you whether there's still more room for this price to go up or go down. Okay, give you an example. If we look into Japanese yen, okay, you can see that the net this week is less than the net of last week. Okay, so you know that net over here is positive, so the demand, or I would say the demand of people selling into the Japanese yen has been increased. So what you want to find out is you look into the long week to week and short week to week. Right, and what you identified is that both has negative numbers. Okay, long week to week has negative, short also has negative. So what the negative sign is telling you over here is that people are exiting their position. Okay, so even on the long side, that means the buyers, they are actually exiting their long position, and even for the sellers, they are also exiting their positions on Japanese yen. Okay, so what it's telling you is that there's no clear sign as to whether the buyers are winning or the sellers are winning because both of them are exiting their positions. There's no one adding more in terms of either the buy side or the sell side. Okay, so this tells you that you have a pretty neutral sentiment in terms of Japanese yen. Okay, and if you look at the COT index, right, 95 is already very close to 100. So in terms of the room for it to go further higher, right, there is some limitation. So this is something that you want to take note, right? If it's 100%, it's actually all-time high. And what it's telling you is that there's a chance that it's gonna reverse because of that. Okay, so it's not guaranteed if you look at COT index, but just give you a rough gauge as to whether there's any more room for it to go up. Alright, so let me point towards New Zealand. Alright, I want to share this in particular because we'll be looking a lot on New Zealand for this sharing as well, right? This session. So if you look at New Zealand, this week and last week, this week net position increased, alright, from 7,000 to 9,000. And interestingly, if you look at the long position and the short position, there is an increase of 847 positions buying into it. And for the sell side, we have people exiting their short positions. Okay, so this gives you a very clear understanding that people are starting to buy into Kiwi and they are exiting their short position. Okay, so this direction is very clear cut because if it's long, people are actually pushing the price of New Zealand futures higher, right? And when people exit it, basically it also helps to facilitate the price to go higher, right? So this is very clear because you have one positive sign and one negative sign. Okay, and if you look at COT index, it's just hovering around 59. Right. So what that means is that there's still more upside potential, more room for it to go even higher. So you don't need to really get too worried that it's all-time high and such. Alright, so this gives you a rough idea as to where the current position is in terms of a 3 years comparison. Okay, so this is how you can analyze the COT report for a rough idea of what sentiment is currently in play. Okay, any questions regarding this? Or if it's clear, you can just type clear or okay. Can Okay, so let me bring you to the chart itself. All right, so if you look at this week signals, we have a few. All right, not the most in terms of signals for this week. All right, but what we have is a few of it. So let's look at pound kiwi first. All right, this pair. All right, we have a potential bearish bet. All right, and if you look into our fundamental, all right, basically if you are bearish on pound New Zealand, you are selling pound, all right, and you are buying New Zealand. So if you look at our weekly directional bias, right, we are bearish on pound and we are neutral on kiwi. Right, so basically that story for selling pound New Zealand is mainly on selling pound. All right, and if I bring you to the chart, all right, so this is the setup that we have. All right, and this trade is currently running in a slight drawdown of, let me check, about 40 pips drawdown. All right, so this is an example of when we analyze the fundamental story of it and then how we actually identify technical setup. All right, so let me show you how the thought process of this. Let me clear my chart. Okay, so once again, right, for technical strategies, what we want to do is we always start our analysis from the right side of the chart. Okay, and you want to first identify what is the overall happening, or what is the overall picture of this chart doing, right? And if it's trending, you want to look for structure strategy, right? And if it's in a range environment, you want to apply the pattern strategy. Okay, so if you look at what's happening over here in this area, right, basically it's trading in, price is moving in a range bound area. Okay, so with that in mind, what we want to do is want to adopt the pattern strategy. Okay, so with pattern strategy, what we shared is that you first identify whether there's a M shape or a W shape. Okay, so if you start to look for those M and W shape, right, what we have over here is some of you might start to find something like this, the bigger and more obvious M. Alright, so you might start to see something like this. Alright, but what I shared over the last 2 days is that this kind of pattern is also very premature because this price over here hasn't started to show sign that it's coming back down. Alright, and you also want to start coupling, as in combining together with the fundamental and the sentiment aspect into your trading. Okay, so you don't just base on technical and then you make a decision. So what we want to do is we now know that the story is that pound, the UK pound, is weak. Right, so we want to look into shorting this pair. And so what we did is that we also identified that there's a smaller W shape within this, right, over here. So once we identify this, what we want to do is we want to start pulling in Fibonacci tool to start measuring whether they fit the criteria of this pattern. Okay, so yes, the last 2 days what we did is we went through some of the patterns, and what we have is we have the bat pattern, Gartley pattern, as well as butterfly. So if you pull from the X point, right, to the A point, what you see over here, right, is price come up. All right, your B point ends around the 50, okay, but never touch the 61.8. So if you follow the rules, all right, what we have over here is actually a bad pattern. Okay, and for C point, you don't really have to measure. All right, what we shared is that the area of the condition for it is very wide. So basically, if you look at it, if it hits around that region, it's more or less that. Okay, so and for bad pattern, right, you need to understand, or if you're not clear, you refer back to your notes and find out where it completes. Okay, so for bad pattern, it completes at the 88.6. Okay, so I dropped the horizontal line. It completes at the 88.6 level. Okay, so if I want to draw in the triangle, this is how it happens. Okay, so it completes at the 88.6 Fibonacci level. Okay, and where we enter, it will be at this level, which is complete. All right, and for our stop loss, we always put above the previous high, which is, if you compare it to Fibonacci, it will be at 100% level. Okay, so depending on the time frame, you want to add either 15 or you want to add 25. Okay, so because this pattern is on a H4 time frame, we add a 25 pip buffer. Okay, and for take profit level, what we then do is we pull from our A point, all right, or if this is a sell, is a bearish pattern, we pull from the bottom all the way to where we enter, all right, which is at the 88.6. Okay, and let me clear off this so you can see. And our first TP, okay, our first TP will be at the 382, okay, at this level. And our second TP will be at the 61.8. Okay, so what I want to show you is that if we have a risk to reward ratio, okay, this is our risk, okay, and if you compare to the reward that we are taking is over here. Okay, so if you compare these two, we have a very good risk to reward. Alright, what it means is that I can afford to lose one or two trades, but when I win back one or two trades, I actually make and cover my losses. I actually make some profit and I'm able to cover those losses. Okay, and for those who have been following, because we sent out the signal last week, yesterday, right, during the weekend. So if you have key in your trades, okay, so this trade should also be active on your side. Okay, so this is an example of how you can incorporate, fundamental sentiment, and then you apply something on this, right? So what I want to share with you is you use this, all right, this weekly report, all right, over here in this technical analysis. Use this to guide you as to what are some of the pairs that I'm looking at, all right, and you go over to this chart to start and see if you can identify them as well. Okay, the key here is what you want to do is you want to see if by just looking, for example, euro dollar, all right, there's a bullish bet. So what you want to do is you want to go over to that chart and see if you can find that pattern as well. Right, and of course we have some other setups as well. What you want to do is you want to go over to that chart and practice for yourself before referring to the full signal list, or even before referring to these technical charts over here. Okay, so what you want to do is you want to practice, and then with that, then you only can start having more. You need to know what are some of the challenges that you face, and then you can start asking us questions. Okay, so up to now, any questions from your side? Okay. Okay, let's do this. Let's go to. Let's look at this. Let's look at euro dollar. All right, bullish bet. Okay. Let me go over to the chart. Okay. Once again, I walk you through the thought process that you understand again. Okay, so the first thing is if you look at the chart itself, all right, without fundamental and without sentiment, you might not be sure, whether you want to buy or sell this. Okay, got it, John. Okay, so for euro dollar, right? So for example, your thought process is something like this. If you look at a chart like this, right, you might not be sure whether you want to buy into this currency or sell into this currency pair. Right, so you need to start to build a story out of it. Whether you want to buy euro or you want to sell euro, or you want to buy dollar or you want to sell dollar. Right, the simplest thing to do is that you want to refer back to the weekly report, right, and look at what are the fundamental buyers for this week. Right, so if you look into this report, right, on the weekly directional buyers, you can see that euro currency we are slightly bullish, alright, and there are remarks to it that just now I walked you through already, alright, using also COT report. And you look at dollar, we are slightly bearish. Okay, so if you couple euro, which is bullish, and you couple dollar, which is bearish, alright, it gives you a clear direction as to where you have a bias towards. Okay, so if you are bullish on euro, you want to buy euro, and okay, to answer Jess' question first, right? If fundamental and technical show buy, but COT shows sell, then how you deal with it? Okay, so for us is there are two approach you can do with. All right. First is if fundamental and technical shows you buy, and sentiment show you sell. That means these three is not aligned. Right? You can decide not to enter. That means you do not want to enter that particular pair. Alright. The other approach you can adopt is that we always focus on the fundamental and the sentiment first, then only we go over to the technical chart. Right? So if fundamental shows that is going up, alright, basically it's bullish, but COT, which is sentiment, shows that is bearish, then basically we wouldn't want to trade that currency pair. Right? So technical for us is that after we have a story, we want to go over to the technical to find a setup. Okay, without that story, we wouldn't want to look at the chart straight away. So what you want to establish is establish your fundamental and sentiment first. Okay, I'll explain it again. So for us, what we want to look for is to look for fundamental and sentiment first. Right? Don't look at the technical chart straight away. You want to build a story, build a case for yourself, build a directional bias. So if you look into fundamental, and fundamental says is bullish, is buy, and if COT or sentiment tell you to sell, that means these two is not aligned. They don't tell you the same thing. If that's the case, you want to avoid that pair. That means you don't trade it. Okay, and of course, with that, then you don't need to go over to technical and find setups already. Okay, so we always start with fundamental and technical, then you go over to fundamental and sentiment, then only you go over to technical chart to find entry. Okay, so if you look at the weekly directional bias, you can also start looking out for which particular currency pair you want to look out for. Alright, what you want to do is you match a bullish currency to a bearish currency. Yes, correct. Technical is for you to identify where you want to enter, exit, and take profit. Okay, so that is the role of a technical analysis. It's not to tell you whether you want to buy or sell, but it's helping you to identify which price level to enter at. So always base it back to what is the fundamental bias first. Okay, so the example of euro dollar is because why we want to look into buying that, right, is because euro is bullish, dollar is bearish. Then we go over to the technical chart and find how we can buy into euro dollar. Okay, clear, right? So for example, if you look at pound, we are bearish on it, and Aussie, we are also bearish on it. Then you wouldn't want to go into euro Aussie pair. That means you wouldn't want to look for any setup on pound Aussie, because pound is bearish, Aussie is bearish. Then you wouldn't want to trade the particular pair. Okay, got it? Okay, so go back to the example on euro dollar. Alright, we can see that the bias is like this. Alright, so we go over to the chart, and what we want to do is we already know that we are bullish on euro and bearish on dollar. So what we want to do is we want to find where we can buy this particular pair. Alright, so in order to do that, you want to start adopting the 4 strategies that we teach you. Okay, One of the strategy is structure, the other strategy is pattern. All right, so depending on which kind of environment or whether this particular pair is it ranging or is it trending. Okay, so what we identified is that there is a potential of 1, 2, 3, 4 setup on this pair. Right, if you look from the left side of your chart, all right, you go up 1, 2, 2 to 3, and you have 3 to 4. Right, so what price is doing now is retracing back. All right, and if you pull in a Fibonacci tool, all right, you can also see that this level over here coincide with a Fibonacci level of 618. Okay, so over here, this is your previous structure. It coincides with a 618. So if price comes down here, that is where is a potential for you to buy, right? But we are not setting a buy level here simply because price is too close to the entry already, right? Basically, yesterday when we did the analysis before we send out the signal, price is already too close to our entry level, so we do not want to take this. Right, but then we start finding, is there another setup that we can take? Okay, so then we see that what's happening over here is that seems like it's also start to range, and what we can find is a pattern. Okay, so for pattern, once again you look for M or W shape. Okay, so if I clear all the chart, right, the M and W shape that you can start identifying, right, is something like this. Okay, this shape or this pattern is not one of the most obvious one, right? But if you start using the Fibonacci tool to measure whether they meet the conditions, you realize that they do. Okay, so if I pull Fibonacci from X to A, okay, you can see that this retracement, right, your B point comes all the way to the 50%, but never touch the 61.8. So if it's at 50%, you know that you have a potential bad pattern. Okay, and the next thing you want to do is you want to measure whether your C point meets the criteria. Okay, so if I measure the C point, I need to pull to measure this C point. What I need to do is I need to pull from this A point, pull it all the way to your B, and you can see it comes up to 382, right, 38.2. So the region that is valid is from 382 to 88.6, right, over here, from 382 to 88.6. So what you see is that this is a huge region and price managed to hit that region. So this point is valid. Okay. So once that's done, what you want to then establish is where it's gonna end. Alright, you want to see where D point completes. So for bad pattern, your D point completes at the 88.6. Okay, so it's just over here. And normally what we do is we just drop a horizontal line at that level. Okay, so what we are expecting is for price to come down at this level. That's where we're gonna enter, and our stop loss will be below your 100, which is your previous low. Okay, and you look at this chart, this is a H4 time frame. What we want to do is we want to give a 25 pips buffer. That means we use this price level, right, which is your previous low here, minus away 25. That is where you put your stop loss. Okay, for take profit, we use the 382 and 618. So how we pull our Fibonacci tool is we go over at the highest point for this pattern, we pull it all the way to where we enter, which is at the 88.6. Okay, the first TP that we're going to take is at 38.2. Right, the first TP that we're going to take is at 38.2, and the next TP level that we're going to take is 61.8. Okay, so what we need to do now, because we have identified this, and this is a pending order, What we need to do now is just to simply key in that trade and wait for price to tell us whether we can enter on this. Alright, what can happen next is price can come down eventually, okay, to hit our entry, or price can straight away continue going up. Okay, so if price continue going up, that means we miss this trade, but that's not necessarily a bad thing because we never risk anything at all. So that's the part where you need to also be, you need to start accepting that at times you will also miss certain trade. Okay, so any questions regarding this particular example? No question? Okay. Cool. Okay. Okay, let's look at another example. Okay, let's look at a divergence example for you, alright? If you look into, let's look at Euro Pound example, okay? So why this particular currency pair? Okay, because if you look into the fundamental bias, okay, we are bullish on Euro and we are bearish on Pound. Okay, so what it gives us is that if we put these two currency pair together, we have a very clear direction because we want to buy. Okay, because what we want to do is we want to buy Euro, okay, and we want to sell Pound. So what we can do is we look for opportunity to buy Euro and sell Pound in the currency pair. Okay, so if I go over to the chart under Euro Pound, okay, clear everything first. Okay, so what you want to do is you start to look at this currency pair, okay, and you look at the chart and you want to find where you can start buying this particular currency pair. Okay, so if you follow the four strategies that we've teach you, there are few ways you can actually trade this. Okay, the first one that I want to walk you through first, it's called the divergence strategy, alright, or in numbers it's called 2618. Okay, the conditions for 2618 is that it first has to have your RSI hitting the extreme level, and what you identify over here is that you have an extreme level over here, and you see that the low of this RSI is going up, right? But the price is going the other direction. Okay, so this is what we call a divergence. And if you follow back to your notes, right, the second condition for this setup to complete is that price has to break above your neckline, which is this blue little dot here. Okay, this little dot, which you can see price has break above it. Okay, once price break above it, what we want to do is we pull in our Fibonacci tool from the bottom to where it stopped, alright, which is where it starts to show sign of reversing and retracing back down. Okay, and our entry level is at the 61.8, which is over here. Okay, our entry level is at 61.8. So what we are expecting is for price to come down, right, towards this level, which is 61.8, and for it to rebound over here to continue higher. Okay, we are only looking to buy this pair because of fundamental bias and sentiment bias. Okay, we are bullish on this particular currency pair. So this is one setup, alright. If price really come down to this level, we will look to buy at this level, and our stop loss will be at the 786 level. Okay, and if you once again look at the time frame, this is H4. What you want to do is then you give a buffer of 25 pips. Okay, and take profit the first take profit level will be at your 0, 0 level, which is your previous high over here. Okay, you can see over here, this is your first take profit level. Okay, the second take profit level, let me just remove this. The second take profit level, you want to use Fibonacci extension. Okay, so just now I pull bottom to the top is measuring the retracement. For extension, you want to do it the opposite way. So you pull from the top to the bottom. Okay, and you can see that there is your various level. You have 127 and 141 and 1618. Okay, for TP2, our level to take is at 127. Okay, so this is TP1, TP2 is at 127. So once again, if you enter here, right, you can see this is your TP1 and this is your TP2. Okay, so this is a 2618 or a divergence retracement setup. Any questions regarding this kind of setup? Okay, if you don't have, right, I want to see if you can also identify there's actually another setup that is also valid for this particular currency pair. Right? The other setup that is valid over here is actually a breakout strategy. Okay, so what you identified over here is that price starts to consolidate in this area. Okay, so price starts to consolidate over here, and our bias for this particular currency pair is to go up. Alright, so we are only looking for price to break above this level. Okay, and how we want to set our Fibonacci level is we pull from this all the way to where the low is. Okay, and our entry point will be at this 100% level, which is the previous high, and we want to add in 5 to 10 pips above it. Okay, so if this price level is at 7945, we want to add 5 above it to make it 7950. So we only enter if price breaks above that high. Okay, for stop loss, what we will do is we put it at the 88.6 level. So we enter here, and our stop loss is over here. Okay, and what we want to do is we need to use the Fibonacci expansion tool to measure our take profit level. Okay, to do that, you drag your tool and then you just pull it anywhere first, and then you double click it and you match the point as it is. Alright, so you need your 1, 2, and 3 point. So once you match it, what you want to identify is where is your TP1. TP1 we always use 1:1, which is AB equals CD. Okay, what it means, right? Let me just draw in 2. What it means 1:1 is that this length of this move, alright, this movement itself is gonna be equivalent over here as well. So this is what we call, this is a 1:1 movement. Okay, so our first take profit will be at this level, which is AB equals CD. The next take profit level will be at the 127.2 expansion level. Okay, any questions regarding this? Okay, if not, right, what you need to take note, alright, for breakout strategy is that you do not want to key in your trade like this, you do not want to key in your pending order like this without a catalyst. Right, so if you remember, right, this breakout strategy, we need a catalyst, we need a fuel to drive price up, break up or break down. Okay, so to do that, we need to go and check on our calendar. Right, so if you check on your Forex Factory calendar for this week, you want to check what are some of the potential catalysts that is going to drive your euro pound trade. Okay, so you want to look out for news, risk event news that is related to euro and news related to pound. Okay, so if you look into this, you have one pound news, all right, which is the manufacturing production coming out on Wednesday. Okay, so this can potentially be one of your fuel for that particular trade. Okay, the other news that is potentially a catalyst is on Thursday. Okay, we have the BOE inflation report, and we also have the monetary policy summary. Okay, so this is important because it talks about the UK inflation situation. Alright, so whether it's positive or negative, that is gonna be a fuel to drive your breakout strategy. Alright, and if you look into Friday, there is basically nothing left in regarding to euro or even pound. Okay, in terms of euro, you have some data over here that you need to take note, which is German prelim GDP and flash GDP. So what you want to do right now is, because today is Monday, right, and tomorrow, Tuesday, there is no such catalyst for your breakout trade. You do not want to key in your pending order first. You only key in when it's closer to the days where your catalyst is going to occur. So for example, the first one is actually on Wednesday, and you look at this, Wednesday is 4:30. So what you can do is you want to key in that pending order either on Wednesday morning, okay, or you do it on Tuesday nighttime. So you want to do it as close to the event itself that's going to act as a catalyst for you to take the breakout trade. So for example, if Wednesday this news comes in, alright, that means this data has been released and euro pound never really moved much. Right? You have another catalyst on Thursday, so you can still take the trade based on, let's say Thursday there is this report coming in that can act as a catalyst for your particular trade. Okay, also for breakout strategies like this one, right, what you need to always make sure is that you have a news event or something that acts as a catalyst to drive the breakout. If not, do not take that trade. Got it? Okay, any questions that you would like to ask? Okay, my UJ breakout, okay, so just ask whether the UJ breakout there is important news coming up. Okay, so let me show you the UJ chart first. Okay, so if you look at this, right, let me clear my chart. The UJ breakout trade I'm playing that is gonna break to the downside, alright, based on this news itself. Alright, so Monday, what we have is a monetary policy meeting minutes. Alright, so I'm actually basing that this Japanese news is gonna be the driver for my UJ breakout. Yeah. Okay, then any other questions regarding this week analysis report? Okay, but you guys have read the weekly report. Do you know how to analyze on that? Or do you know, or do you have any challenges reading that or using the report? Okay. Okay, then let me check. Do you guys all have access? All have access to this Signal spreadsheet, right? Okay. Okay, it's loading. Okay, so this is how I'm gonna update. Alright, so for example, like UJ, right? This UJ breakout, right, is no longer valid. I'm gonna just click and update it and say it's cancelled. Right? Let me just. Okay, so what you can do is you can always refer back to this spreadsheet, alright? And once I update it, I'll usually put the date and time as well. Okay, so first, always remember to check the top left hand corner of the spreadsheet, right? Whether when it's last updated. Okay, uh, so once, let's say for example now it's 10, right? When I update it, I'll also update the time that I update this. So when you check, you want to always cross check as to whether when this Excel sheet has been updated, right? So once it's updated, what I'll do, I will also send out a notification WhatsApp as well as through Slack, and you guys will also get notified through that as well. Okay. The other thing that I would like to, I think I haven't walked you through that time, is if you guys want to have live update on news in terms of Forex related stuff, right? You can go to this website called forexlive.com, right over here, and just key in. Right, you can go over to forexlive.com, and what they do is that you click on this part called the more section. Okay, they have categorized their news and their updates into different category. Okay, the useful part for this is that you click onto session reps. All right, if you click onto session reps, this will pop up. Okay, so this gives you a very good idea as to, for example, European FX news rep. That means what happened in today Euro session, all right, Europe session, the London session, all the news are being consolidated over here. So what you can do is you can refer to all the news that's happened today. And of course, if you want to look into what happened to the Asia market, then you refer to Forex Live Asia FX News Rep, right? And this is the Asia session. Okay, and what they do is you can also always refer to the past, alright? For example, last Friday, over here, last Friday, this is America's FX News Rep, which is referring to the New York session. Okay, so this is a very good site for you to keep updated as to what has happened in the previous trading session as well. Okay, so for example, if you are working and you go back in the evening, right, you might not have caught some of the news that happened during the London session. So what you can do is you go to Forex Live, you go to More and click on Session Rep. Alright, and you can quickly refer to what has happened in the Euro session, in the London session, as well as Asia. So you can keep yourself updated as to what some of the events and news that happened during the day itself. Okay, so I would encourage you guys to keep updated and keep yourself informed as to what's happening. Okay, any other questions that you have? Okay. Okay, for John, right? Just now you wanted to know more about COT. You want to ask your question so that I can also, if need to, I can do a recording for you. Then you can also better understand what COT the question that you want to get answered. Okay, for Jess' question first, right? The COT from last week. Okay, the report that you see, alright, this one. The first thing you want to check is the date, alright, whether it's the correct one. Alright, for this week is the 9 to 13. Alright, so if you look at this COT report, right over here, what I mean by this week and previous week, this week I'm referring to the most updated one, which is the one that is released last Friday, right? Previous week is the one that is released the week before. Okay, so this COT data is the most updated data that I can get for you. Okay, so your question is, I hope that that's what you wanted to ask. All right, so this COT data is the most updated one that you can access to already. All right, for John question, how many of you can make it? We can do Monday this time as well. Okay, then we can do that for next week. Alright, we can push it slightly earlier, around maybe 8 p.m. Are you guys good? You can do 8 to maybe 9:30, then I think then don't need to end too late. Z okay? Okay. Okay. Yeah, 7:30. You guys okay? Can right? 7:30. Okay, can. For Chuan, if you want to join in, that's also okay. If you can make it on 7:30. Okay, so with that, right, what I want you to do is to do the three things. All right, go and work on your trading plan. All right. Once you have done your trading plan, send it to my email so that I can have a read onto it and to let you know what you need to improve on. Or what you can do is you are already on the Facebook group. All right, so you can also add your link or your document, your trade plan onto the Facebook group. right? You can also find out what are some of the trading plan that the previous student has done in the group as well. Okay, so if you go to the group, which is this one, you click onto files. All right, you can see that there are some previous trading plan that they did, all right, including Vincent's trading plan is over here. So what you can do is you can use this as an example, all right, to work on your own trading plan as well. Okay, so this is the first step that you need to do. You need to start on this first. Only then we can know how, moving forward, what we can do to actually help you in your trading. All right, so take some time today or tomorrow to do that. Okay, just this is the Facebook group that I've added you. You can go and search for it. Let me just drop you that link. Okay, all of you are already inside this group. Okay, it's called the 4 Pillars FX Mentorship Program Group. Okay, you can either upload your trading plan here, or you can send it to me via email. Anything will do. Okay, all good with that. Okay, the next thing, right, is other than working on your trading plan, go and read up the weekly analysis report. All right, read onto this report. Go and understand how to use it, and if you through reading, if you have anything that is not clear or you have any questions, then you can start asking me as well. Okay, since you guys haven't read it and such, then it will be very difficult to also walk through you, because you might not. I also not sure which part you understand, which part you don't understand. Okay, so take time to do your trade plan and take time to read into this weekly analysis report. Can, right? Okay. If that's okay, yes, which is next week. Let me check the calendar. Uh, yes. Next week, 16. Right, we're gonna do 7:30. Yep. Okay. 16. 7:30. Okay. Can. Then if that's the case, all right. Just work on your trading plan if possible. Finish your trading plan before next week. All right. Best if you can send it before next week so that I can look through it first. Okay, so with that, then we'll just end this today's session, and then I'll see you guys next week itself. Yes, can. Okay, I'll this session is recorded, so I'll just let you guys know once it's up. Alright, okay, I'll see you next week then.